Hey guys, so from the time I've been making this video, we are roughly 5, 6 weeks from the large drop that happened last March. And from the time that happened, the market has started also to somehow make its way and started to rebound from oversold levels. That being said, though, it still does not underpin that there were a lot of people who entered when the market was higher. You may have entered sometime in 2018 when we were above 8,000, or sometime last year when we were hovering from the 7,000 levels of the market. And as you all know from the previous videos that I posted, the drop that we had was quite fast, especially in March. The large drops that we had was even faster than the 2008 drop that we saw last March. That intraday the index hit 4,000 from a very 1 day steep decline. So that being said, you are at a loss, or you sold at a loss. Either way, you are losing money either on paper or you already actualize your loss. This video is here to at least give you some insights on how you can take back those losses as well. Again, this is not a get rich quick, get your money back quick, hocus pocus, you'll just magic everything and everything will be will get better. This is not a video also that will condemn you that you should have done this, you should have done that. Again, please remember that this channel is all about speaking what's good. This channel is about bringing you up. That you may be in a situation right now where it may not be as good, but I hope that after this video, it gives you enough clarity, enough insight that you get to you'll number one find the lesson in all of this, but number two, from the lesson you get to pivot and you get to turn your investing and your finances around. Because at the end of the day, that's all I want. I just want you guys to be able to win and use this era for you to be able to build wealth in the stock market, because it can be done. However, it's not something that's a sprint. It's something that you build over time. It's something that based on your strategy, based on your technique, that's something that you follow, because it's still at the end of the day a marathon. So if you guys are ready, if you guys are okay, comment I'm ready, I'm excited, and let's begin. But before I proceed with the tips, now I have 8 tips for this video. I want to give you a quick update on the status of my YouTube channel. So I decided just a couple of hours ago. I wasn't able to sleep as well, but I wanted to do this in terms of direction. For those who are watching right now, this is my primary channel, Marvin Germo. It has over 100,000 two subscribers. So for those of you who just like stock market content, stock trading, stock investing, technical analysis, fundamental analysis, long-term investing, peso cost averaging, the economy, everything that connects to the stock market will just be in this channel. Now, you might be asking, paano na yan? How about Carl D? How about the topics that are highly connected to property investing, entrepreneurship, insurance, personal finance, saving money? That's where I'm gonna put everything on this second channel. I renamed it from Stock Investing Made Easy to Marvin Germo Podcast, because that's where most of the interviews will be. So if you are interested on real estate, you're interested on how to start your own business, entrepreneurship, life insurance, investing, everything else that's not purely stock market, you can subscribe here. So at least it gets, I guess, split. I don't know if this is a good idea, but I just think that there are different needs for different types of people, and I just want to split it. So this channel is just new. It just has 1.57 subscribers, and if you get so much value from my first channel, I'd super appreciate it if you guys can subscribe to this one, because I'm trying to split up the content so that people know what they're following and expecting. So there, I don't know if it's a good idea. Let me know if it's good. But anyways, how do you take back your losses? First things first, and I know we are 6 weeks from the time it dropped, but tip number one is you're not supposed to panic. And the reason why I'm saying this again right now is drops will happen. again. Please remember that markets move in cycles. If it moves up, it will definitely go down again. If it dropped massively last March, there will come another time in the future where it will drop massively again. It's not a question whether the market will drop massively. It's only a question of when. It's only a question of what's the reason. It's only a question of how long before it drops and how long the drop will be as well. But the reason why I keep saying that is, in the midst of those drops, you have to be fully prepared, fully aware of that it's normal, it's part of the game. That's why I kept saying it over and over in all of the videos, that the reason why I'm not scared every time I invest in the market is because I've seen it, that it happened as a cycle. And number two, I only put money that I can tolerate. I only put money that I do not plan to touch. I only put money that I can withstand the volatility. I only put money that is above and beyond my buffer, above and beyond my emergency fund, above and beyond my savings. I'm fully diversified. I have other investments. I have other businesses that it allows me not to panic. It allows me to be able to have enough buffer that I can take as much risk in the market as I can. I can take as much risk in investing as I can. Because please remember this, the difference between the market and probably real estate is that in real estate, you can control the amount of rent that you put out. In the stock market, you cannot control how fast buyers move up a certain price. You cannot also control how institutional investors would sell it down. And the reason why I'm telling you not to panic, because if you panic, you will react based on emotion, and if you react based on emotion, that's when you will lose. And I keep saying this over and over, that emotions in the market is one of the biggest formulas for you to lose money over a period of time. I don't know if this happened to you throughout this time, but if it does, I want if you can share your experiences on the comment section. That would be so helpful, so that other traders, other investors get to hear your experiences, and we all get to learn from each other. But what's very, very important is do not panic, because sometimes, especially in the tick of the moment, you are logged in, and then you see your stock drop a lot, you see your stock drop massively. There will be a cost for you to transact and press that button to sell. Or there are certain times where news of fear would come out, news of something that's bad, that because you get so fearful about what could possibly happen, you transact and do something bad as well. You transact and do something that's opposite of what you want to do. So if you don't panic, it allows you to breathe. It allows you to analyze the situation in grand context. That's why even in the stock market, no, they would normally pause the market when there are large drops, because it gives time for people to digest what's actually happening, the information that's there. Is it something that's really legitimate? Is it something that will actually change the fundamentals? So if there's one thing, please remember, if you only stay for tip number one and you don't go through the 8 tips, please do not panic, because it's so important. The sooner you remove panic from the equation, the better it will be for you. Next, number two is basically this. Check your current situation, meaning when you have holistically stopped, paused, and started to analyze things in its proper context. Look at your portfolio. The biggest mistakes of a lot of people also is that when they get emotional, they fail to check their current situation. Comment below if this has ever happened to you. Because you saw your portfolio down, ayaw nyo na mag-log in. Ayaw nyo na makita yung portfolio nyo. Ayaw nyo na makita na red. To be also balanced, if looking at it at a red causes you to become emotional, then probably might be prudent not to look at it first. But if it comes to a point where you're not emotional already, my suggestion, log in, face the reality, face the fact that your portfolio is in the red. Because if you start checking it again, you start monitoring it again, then it gives you the opportunity to somehow uh, glean from your mistakes. But above from that, gleaning from your mistakes, it allows you to re-strategize, to take advantage of certain opportunities, especially if the market has dropped, especially if there are certain stocks that are oversold and have started to bounce, which we saw over the past few weeks that's what happened. Or there are certain stocks, because they've been sold down, they become, from a fundamental analysis standpoint, very, very cheap. But you will never know that unless you check your current situation. And the reason why I'm saying that you need to check your current situation is primarily because of this. If you log in, check your charts, check your stocks, then you see it that, hey, it has dropped, but it's still hanging at this support level. I may not need to cut, I may not need to sell. Or on the flip side, when you start checking, you start logging in, you start looking at your portfolio, you suddenly see that, it just actually started to break down. There were successive sell signals. There was a beat down, but it just broke the support. Then suddenly you can take action. You can sell, and now you're not just selling out of panic. You're selling because it's legitimately based on technical analysis, or it's legitimately based on, for example, you're looking at a certain company. Then because of what's happening on the coronavirus, or what's happening based on the economy, this company is not anymore as good. You project that this company will lose a lot of money for a lot of years. This because of what's happening. This company may not proceed in its growth trajectory. If that's the case, also, then that it's valid for you to actually take action and sell. But what's important there is you did it out of, number one, not following your emotion, not panicking, and number two, basing things on your analysis and checking your current situation. So we're currently on tip number two. I hope you're getting something. Number three is this, and this is so important. People miss this step because they always want to get rich quick. They always want to go for the hottest stock. They always want to double their money quickly. They always want to make this amount of money per day, but it doesn't work that way. Money is just a result of skill. Money is just a result of you doing your due diligence, doing the time, doing the experience. If you think trading is super easy, then everyone would be a billionaire. If investing is so easy, then everyone would be a billionaire. But that's not the case. It's you having your hands dirty and in the trenches trying to build that skill so that you become better. So tip number three is this. You revisit your financial plan. When I say you revisit your financial plan, it's checking, teka, uh, I invested for the stock market for this goal. Meaning, let me give you an example. If you invested for the stock market for the college education of your kids, and your kid is just 4 years old right now, your plan is to bring him to college at 18, assuming that that's his time frame. So that means you have 14 years. A drop to a drop today should not even matter because you have not hit your goal yet. Your goal is you will only take out the money when you need the money already for your college tuition, for your child's college tuition fee. You're 14 years from that goal pa, so why should you panic? Or if your goal is to invest your money for retirement, and then your target retirement say is 45 years old, meaning hopefully by that time your investments, your cash, when transferred into passive sources of income, preferred shares, high dividend stocks, bonds, REITs, etc., or even LTNCDs, IMAs, savings accounts, high yielding cash accounts, would be enough to be able to take care of your day-to-day living. So you say by 45 dapat okay na yan. You're only 28 years old right now. You're only 30 years old. The question is, kailangan mo na ba yung pera? Not really. So if hindi mo naman kailangan yung pera, why panic? Why decide based on the downward movement of the market today? Why be scared? It's it's down today, but in 10 years, 15 years, the market should have recovered as well. And that's where you get to put your thinking cap on it. That's where, oh nga no, I don't need it yet. It's still 15 years, it's still 20 years before I need it. I better hold on to this position first, and when I have cash, it's down this much. This cash will give me the ability to be able to buy it at a cheaper level, knowing that if I also buy it at a cheaper level, if it drops, I can withstand the volatility. That if it drops, I'm okay with it. So with that mindset, you're supposed to be able to weather storms like this. And it also goes to show, no, when you're investing for the long term, especially you're investing for example, a college tuition fee for 14 years, a retirement plan for 17 years, it actually means that since it's a long period of time, there will be downward pressures, there will be downward movements, there will be recessions. When people always say that you will always make money in the market, it will always be up. I have this perfect strategy. This is the best strategy. This strategy will help you make money. Then that's a fallacy. There will always be times and seasons like this where I it will be a struggle for the economy, it will be a struggle for the market, and you have to put that at the back of your head already. When you start investing in the market, you have to put that at the back of your head, that there will be times and seasons like this where it won't be as good, where it won't be as productive, especially if you're investing for a stretched period of time. Are you guys learning? We're at the 15-minute mark. We're still at tip number 3, but I'm enjoying sharing this to all of you. So tip number 1, do not panic. Tip number 2, check your current situation. Tip number 3, revisit your financial plan. I was supposed to say flan. Plan. Tip number 4 is assess your cash flow. Meaning, uh, the way you attack your investing would be different based on the money that's coming in. Meaning, if you lost your job and zero money is coming in, it may be prudent to not put any more money in the stock market, even if your time horizon is long, even if the stocks are cheap. If you lost your job or you're a freelancer, no money is coming in, you're a business person, no money is coming in right now, even if there's opportunity, it may not be a prudent time to enter in. Or even if there's opportunity, or even if you're at a loss because your business needs the money, then you may need to liquidate that position. You may let I'll allow me to answer this. I said that you put money in the market that you do not need for a long period of time. But for example, you have a business. The business already, you're already on month 5, and the business, there's really nothing coming in, and then you exhausted your cash already, then you exhausted your other short-term placements, fixed placements, and all that you can liquidate is your stocks. Kesa umutang ka to protect your business, kesa umutang ka to stay afloat so that you can eat, even if your stocks are at a loss, it might be more prudent to sell at a loss because walang pumapasok eh. We have to be realistic here, and we have to be honest. People always say, you just hold your position because it's for the long term. Not really, because there will be some people, because of this crisis, that their incomes will be hit. Their finances will be hit. Their cash flow will be hit. They're not earning as much. So even if you're at a loss, kesa umutang ka, kesa wala kayong kainin, you might have to liquidate. So you have to assess your cash flow. You need to know where you are. But for people that money is still coming in, you're not as affected. Growth might not be there, meaning yung negosyo mo, yung kita mo, yung iba mo mga businesses may not be as good, may not be as growing, but may pumapasok pa rin, meaning you can still go on with your lifestyle, everything will still go on, and there's no threat to your savings, there's no threat to your cash. By all means, then it's very it that's a candidate already for you to either you can hold on to your position, or you can cut your position with the proposition of cutting to have cash to be able to invest again later on. Or if you have extra cash, it's another proposition for you to add. So please remember this: the one who has a lot of cash, the one who may bala kasi may pumapasok, they will be in a better position, they will be in a better scenario, because even if the market continues to drop, as long as they have money to be able to put in, to be able to add to their position, then they will do very very well. Which leads me to the next tip, which is highly connected to number 4. You have to ask yourself, do you have extra cash to invest? Because if money's coming in and you have that extra, now I said this in a previous video, that I have a just in case of recession fund, that I use that fund for me to be able to pick up stocks at cheap prices, pick up investments at cheap prices, which I've started to pick up already, especially for my long-term core investments, stocks that I want to hold on for a very very long period of time. So that extra cash is something that I would use for investing. That extra cash is something that I can put in. So people are saying, do not catch it, do not catch the stocks while they're falling. You have to understand, iba-iba tayo ng scenario. The person who's probably saying that might not have a lot of cash versus a person who has a lot of cash na kaya sumalo, na kaya mag-tranche. That's why it's very, very important that you follow your own strategy when you start trading and investing. That's why it's so important that you have to know yourself as an investor, because when people say, do not catch this, do not catch this, but you have the cash to catch it, then follow your plan, follow your strategy. You always have to follow who you are. It's time that someone actually says that that there's no one style that will fit all. It has to be something that follows you, and it goes to connect to the next tip. Tip number 6, stop comparing yourself with other people. The more you compare yourself to other people, the more you will lose. The more you compare yourself to someone who has done this, done that with this style, and you try to copy it, you will lose. I'll repeat it. If you copy someone else and that style does not fit you, you have to remember the narratives are all different. You have different risk tolerances, different capital, different amount of money, different lengths in the market, different portfolio sizes. Some have three portfolios, some have just one portfolio, some have 20,000 pesos, the other has 10 million pesos. The strategies behind that will be totally different. Some people are more don't have patience, know that when the stock drops, they they don't have the patience to wait until it recovers, and they'll have to cut loss. But some, they have the patience, they have the stable income, they have the money. So stop comparing yourself to other people. Stop looking at what they're actually doing. Start focusing on your own race. Start focusing on who you are as an investor. Start focusing on what works for you, because what will work for you will not work for them, and what works for them will not work for you. I'll say this over and over, that I may give a lot of analysis, a lot of advice, a lot of techniques, but those are in no way something that you must copy to the very letter. Get the principle, get the logic, get the strategy, and implement it on your own. That's why I've been saying it. Do not go for picks. Do not go for that. Go for your own analysis, because that's what works. That's what will help you crush it. That's what will help you grow money over a long period of time. So do not compare someone else's race with yours. Do not compare what someone else has earned to what you're earning. That's do not do that. Okay, number 7, use this time that as you start realizing and assessing your cash flow, where you are knowing where your weaknesses are, knowing where you made mistakes, the next thing that you can actually do is you have to use this time to rebuild your skill. Meaning, as you start reassessing yourself, looking at where you made those mistakes, looking at the things that cost you to go to where you are right now, check, did I not cut? Why did I not cut my losses? Why did I not sell here? Was it because of fear? Was it because I was not able to check? Was it because I was not able to log in? Was it when I was wanting to log in, my browser was not working, my internet was not working, there was a problem with my broker? You have to go to the root cause of the situation, and you have to refine it. If you're using moving averages, what is an average that will work for me? Is it the longer ones, the 200 days, the 100-day moving average, or are it the shorter ones, the 20, the 10s, the 50-day moving average? Use this time, use this lockdown for you to be able to build that skill, because sayang you have so much time right now. You are not traveling. There's no 1 hour, 2 hour, 3 hour, 4 hour commute going from wherever. You have that time, you have that free time at your disposal to be able to build that skill right here, right now. Don't waste the time that's in your hand. Build that skill right now, whether it be doubling down on fundamentals, growth, dividends, valuations, or looking at companies from a perspective of the macroeconomy, or looking at it from a trading perspective, from technical analysis, from support and resistance, from following the trend, from using market indicators. Whatever it is, you have to double down on what works for you right here, right now. Use this time to build your skill. And lastly, comment below if you're learning. No, comment below, wow, we're in the last na, sa wakas matatapos na si Marvin. Number 8, you have to begin again, but start small. So when you start building your craft, so for example, if you have a million pesos, or you have 100,000 pesos, don't use that for your allocation for investing, or even don't put one stock in that, don't even chop that. What you do is you use a small portion of that for you to practice. And a lot of people are saying, paano yan, sayang sa charges? Don't worry about the charges, mababawi nyo lahat yung charges later on when you start winning already. What's very, very important is you find your sweet spot first. You find where you're good at first. You find where your strengths are, because when you find that already, you'll be able to pivot and find what will work for you, and that's when the profits start coming in. Again, I'll say this over and over. People are saying that ayoko maglagay ng maliit kasi sayang sa charges, and then sayang din yung potential for me to earn. Guess what? If you put a lot of money, and the skill and the talent and the experience is not yet there, mawawala rin yung malaki yung linagay. So better start with a very, very small amount. Don't think about what you will earn first. Think about how you will learn. Think about how will you build the skill, because I'm a lot of people want to get rich quick. A lot of people are disappointed that they're down on the second month, on the third month. Guess what? If you're working for 10 years, whatever your profession is, the reason why na-promote ka, the reason why you're excelling in your career, in your business, because you have done it for a long time already. The same amount of work, dedication that made you successful in your work is what will make you successful also in investing in the stock market. It's not an overnight thing. People always think that when I read a book, attend a seminar, watch a video, it's gonna make you good. It doesn't work that way, guys. It works by allotting a small amount, being faithful with little, putting as much as you can on it, putting a lot of effort on it, then building it from that. Then, as you start to build, as you start to learn, di sa kanyo taasan from 5,000, naging 10,000, naging 20, naging 40, naging 80, naging 160, naging 320, naging 640, until you're trading a million. That's how it goes. It's not get rich quick, it's get rich right. It's not trading to earn first, it's trading to learn so that you get to earn later on. And things like this is what people don't like it, because people feel that stuff like this is boring. Stuff like this is not what's, oh, bilhin nyo tong stock na to, ito na yung pick na kailangan nyo gawin, follow my one step strategy that's gonna make you money. It doesn't work that way. It's not like that. It's you taking the time to learn. It's you building your skill. It's you allocating the time, the resources, and starting small. That's what's gonna make you money. Now, to recap everything, tip number one, do not panic. Tip number two, check your current situation. Tip number three, revisit your financial plan. Tip number four, assess your cash flow. Tip number five, you ask yourself, do you have extra cash that you can invest? Tip number six, stop comparing yourself to other people. Tip number seven, use this time to rebuild your skill. Tip number eight, begin again and start small. Before I end, what's your favorite tip? I want to know. Tip number one, two, three, four, five, six, seven, eight. What is it? Explain. I want to know. I want to hear your thoughts and your ideas. Did this video give you so much insight? Super appreciate it if you could like, press a thumbs up, because it helps the YouTube algorithm to show this video to so much people out there. And I really believe that messages like this are what people need to hear. That's why I'll never stop making videos like this, because I really believe people need to hear something about this, something that helps build skills, something that helps build strategy, that it's not get rich quick. It's not this is the ultimate source of information. No, I'm teaching you that you get to decide it on your own. So if you find so much value in this, super appreciate it. Like, subscribe, hit the bell, press a thumbs up button, support this channel. And for those asking about the books, Shopee is back, guys. The link for you to order via Shopee is in the description. You can just click the link and it will lead you on how you can grab a copy of the book. If you cannot order via Shopee, Shopee is not in your area, there's another link beside that where you can order in whatever region you are in the world. Then I have two stock market courses online. One is with Chinkitan. It's called Stock Market for Everyone. The details are there below as well in the description. And then another one with Sean C, where it's called Make Money, Grow Money, where we teach you entrepreneurship, investing, business, and the stock market, all in that video. And again, guys, this is my first channel, Marvin Germo, and my second channel, Marvin Germo Podcast. Super appreciate it if you can also like that. And that's it for now, guys. I hope that this video is something that added tremendous value to you, and I hope that it's something that is helping you to reach your goals of financial freedom, because at the end of the day, that's all I want. So this is Marvin Germo on a Sunday night. We have one more video after this, and I hope you get to watch that, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.